Hello traders, Gary Wagner with the Gold Forecast here for you on another historical day. I've got a lot to cover, so we'll do that quickly. Today is the 14th day of October. It is Thursday, and this is the Daily Report. Gold currently trading up approximately $3 to $4, $3.70 higher. This is the December COMEX contract of gold, a weekly chart, 1377.30. Interesting thing on the spot market, we had a new historical high. Currently, we have the cash spot market trading at 1376.60, 1375.60 bid ask. As I said, at 1375, it puts it up about $3.70, but we did get a high of 1388.30. That's correct, 1388.30. I'm going to show you a chart in a little bit that illustrates why I think we're actually hitting some pretty strong resistance, and we have some pretty strong technical data to show you, I believe, that will confirm that. So we're going to have to come together and strategize exactly what we're looking to do next and how we're looking to do that, all here on today's Daily Report. Now, if we take a look at the weekly chart, as you can see, it is still in this full-blown pattern to the upside. As I said, here you've got about the tact or angle, and then that kind of changes where you have a much stronger linear tact up here. We're still getting these consecutive higher closes in terms of the week, although it has come off of the high today. Traders, this is a 60-minute chart of Forex Gold. Forex Gold, but it's the cash market. And as you know, we've been looking at this over the last couple of months, and really what we look at when we're looking at the 60-minute is it gives us, at least to me, a much more concrete feel of whether the market's trending, forming a base. It gives me more of a sense than a daily chart. Of course, as a commodity CTA back in the 80s and 90s, I used to use very, very short-term charts, 3-minute, 7-minute, 15-minute. As I've gotten older, whether it's my pace is slowing down, but I prefer to look at the daily and weeklies, but I always go back to the 60-minute. Now, as we've talked about before, when we look at it, we talk about this base forming. In other words, I call it a trading band. It's really where it's trading within a very narrow and defined range in terms of the low and high. So you get a cluster in which you have resistance, support, and it will trade through that until it's able to break one way or the other. In gold, it's been mostly trading higher, so of course you get that breakout to the upside, and then again it goes into that defined trading range or band. It then breaks out, and we've talked about that before. Now, what has been interesting over the last, say, week to 10 days is rather than getting these what I'll call trading bands, they're just narrowly defined trading ranges. We started to get a unique set of trending markets in which, although here you get that narrow band, it breaks out. Right after that, if you notice, the market itself begins to, rather than break out, it breaks out and then starts trending itself, comes back down, moves back up, and you can see that it is truly in this area gotten out of the cycle of trading in a smaller band, and it's absolutely trending. Now, we ran into some real resistance at 1388, and you might be wondering, well, where is that resistance coming from? And I've got a very, very good chart that I want to put up for us that I think illustrates it very, very well. And it's a daily chart of cash gold, and it is the main chart, the primary chart that I use with my Elliott wave count. But here's what you're going to find interesting. Let me go ahead and blow that up for us, traders. Let me see if I can get that all in. Perfect. What I've added here is what's known as an Andrews pitchfork. Now, on an Andrews pitchfork, what you basically do is you use 3 data points. I might go ahead and redraw it, so just so you can see how unique this is. You start with this data point here. This was my first one, this low. I then extended that line to this low. That created my second data point. So I used the bottom of C here. I used the two basic bottoms of the market, and then I simply extend or move that over this way to the third data point. You need 3 data points for the Andrews pitchfork, as you can see. So 1, 2, and 3. Now, what it creates then is by using these 2 data points and this top here, it then gives you a series of support and resistance and midpoints. So this is that 50% mark right in here. The 100% meaning the bottom of these 2 wave points right here, and of course what's called 0. Now here's what I'm finding as fascinating. If we look at where the upper level of this pitchfork came, what you're going to notice is when we hit this, and I was watching it last night, but when we went ahead and hit this point right in here, we absolutely hit some resistance. So it does make sense. In other words, realize the techniques I use are as much of an art as they are a science. So the fact that I'm projecting 1400 before a small correction, meaning wave 4, doesn't necessarily mean it's going to come exactly to 1400. 1388, as far as I'm concerned, is pretty darn close. And so here's what I'm finding. If we go ahead and extend this a little bit, and you'll see where my projections come in, go ahead and blow that up a little bit, you're going to see the fact that although this pitchfork was drawn off of the 2 lows that I showed you and this point here, I find it fascinating, absolutely fascinating, that we get these lines coming together, meaning you get the top, you get this movement right in here, and that is exactly where the market stalled and found resistance, right in this candle. So the other thing that I'm noticing is that the candle itself is what's known as a shooting star. Shooting stars have been significant candles in showing us the tops. Now, do I think we're at a tentative top? You know that I'm long-term bullish, but do I think that we're at a tentative top in the market right now? Traders, it's a little bit too early to tell, but I can tell you this. Traders are pulling profits in this area. So for us to put an order to try to get out, if it makes a run for it again, that might be a significantly wise move. To trail our stop up at this point to lock in some profits, I think that's also a prudent move. But here's the caveat, is that the market has this tremendous trading range for it to knock us out and then just continue higher, which it did to us, by the way. As you recall, traders who've been with us, we actually bought these bottoms. And when you look at certain areas that we bought at, for example, this 1340, there's that a double bottom right here. We've bought at the bottoms of the market. It's been the volatility that's been knocking us out and limiting the profits. Of course, we've still made profits on these trades, so I don't want to be greedy about it. But at the same time, I want to realize that the volatility has to play into the way that we want to harness this trade. In terms of a stop right now, and in terms of where a stop makes sense, it's got to be above these 2 candles here. And if we simply look at where that takes us, I'll just use a horizontal line to do that. 1 second, traders. I'll extend you'll see that it takes us right around to 1358, 1360, right in that area. Traders, you can go ahead and move your stop to 1355, 1355 on a protective stop. I do want to take a look and see how this market reacts, because if it does want to continue higher, of course, we want to be in there. I really don't want to get out of this trade with only $15, $20 of profit. However, I am bound by the fact right now that I'm seeing some pretty strong technical evidence right in here with the Andrews pitchfork that in fact we have hit some resistance. So what would I look for it to do? Well, my sentiment is this: resistance in this market has been absolutely broken in every other occasion that we've looked for. Let me go ahead and blow this back down. As you can see, this again is that Andrews pitchfork. And for this market to continue on this upward path, it's going to have to breach and get this resistance line to become support. If it does not, our original plan and our original forecast, meaning this wave 3 to move up, to find some sort of resistance, which it absolutely has, to have a small correction, and then to continue higher, it seems as though right now that actually could be likely. I think that we have some compelling evidence right now that we have hit some resistance. We certainly want to react to it. Conservative traders might even want to put a market order in there to exit the trade. In other words, you have a stop. It's called an OCO order. One cancels the other. And you can simply say that maintain your stop where it is or move your stop up. And then if the market goes to 1385, to sell the position and have it cancel the stop. And that way, pull out $45 worth of profit. That might be something you want to try for a day or two, although I am under the belief right now that this market could in fact see some sort of a retracement, and that's simply based on this long-term game plan that we've been working on. As you can see, when we look at our initial game plan, which is where we thought the market would go and the timeline we thought it would take to get there, you notice that we're really right there. We're right at that crux. So if the market can begin to take out this 88 and close above it, I think that this one wave has a good chance to continue higher. However, I'm also and even more likely to believe, although the evidence has got to really continue to move in that direction, we have an absolute band of resistance in this area, as you can see, and so that right now I would need to see how the market reacts in this very critical area. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for the weekend review. Bye-bye.
When I look out my window,